Hi dear trader, this is the weekly Forex recap video from Admiral Markets. My name is Chris, and I'm going to take a look at the critical points in the Forex market of today at looking at the Euro dollar, pound USD, dollar yen, and AUDUSD. First of all, though, be aware that this video is shown to a global audience, but may not be suitable for everyone. Take a look at this link, select your country of residence, and contact the appropriate entity to find out more if it is suitable for you and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. If by continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. Alright, I want to take a look first of all at the AUDUSD 4-hour chart. This is a triangle break here, as you can see, and price now retracing back towards the broken triangle. The triangle you can see probably a bit better on this weekly chart. A nice downtrend, of course, on the AUDUSD. And this triangle lasted for the break 2 weeks ago, but last week we didn't see a continuation, price actually showing a bullish weekly candle. So is that a first clue that price will make a bit of a retracement back to the triangle before we see the downtrend continue? Well, that is one of the scenarios I'm keeping an eye on, or if it of course breaks through last week's low, then I would expect the downtrend to continue as well. Zooming into the daily chart, you can see price actually stalling at the 38.2 fib. But I think 4-hour chart is still the most important. And the reason why is because of the fact that there are support levels right in here, there's support levels right in here. And obviously if price stops at this level, there could be a inverse head and shoulders like this, which could provide that support for price to rebound up to the 50 or 61.8 fib, which is equal to that broken triangle. And then price could turn around for that downtrend continuation. Will this pattern play out? Well, then price would have to at least stop at around 69.50 or 69.60-ish before, of course, we can get that confirmation. At least that's the max that it should then bounce. If it breaks through that, then, well, perhaps then we're getting the downtrend continuation. At the very first, price could retest this bottom, and then if it breaks that bottom, then that trend should continue. So looking at the hourly chart, I can see the following. Basically, price, if it does respect these tops, it would also be respecting the 50 fib and the 61.8 fib. And if it does respect those fibs like it did the 38.2, then the target of that, right, would be the 272 and the 61.8 target. And look at that, they line nicely up with those bigger Fibonacci retracements of the 4-hour chart. So I am expecting a bit of a bounce. I will wait for price action to confirm that. And let's see then how price responds as it bounces up here, or if it breaks below. If price gets rejected at this resistance like this, I would try to get out at break even at that case when I have a higher low, for instance, to move the stop loss behind. And if it doesn't reject that strongly, but actually breaks above that resistance, future resistance trend line, then that could be a breakout up to these targets. So that's very key, how price responds at this level, how it responds up in here, whether we get a break to the upside or break further down on this AUDUSD. Now, before I take a look at the other pairs, I just wanted to let you know that we have webinars scheduled this week. We have the usual one on Monday with Nennet looking at the recap, and he's going to tell his trade setups for these major pairs, of course. Tuesday, Wednesday, I'm going to take a look at live trading, look at the live market in the morning. Wednesday evening and Thursday evening is time for education. Nennet takes a look at divergence, and together on Thursday, we take a look at trading logic using timing. So time factor there is the key in that webinar. Hope to see you in one or all of these webinars. All right, let's move to the euro dollar. You can see price right at a very long-term resistance trend line, in fact. And there's a bit of a channel indicated by the green lines, price going sideways already for a lengthy period of time. So what's going on here and how long can we stay in that zone? Well, I think for basically when looking at the monthly chart, in fact, that could still be a few months perhaps. Of course, if price does break through this 104.50 bottom, then the downtrend is probably in motion. But for the moment, I wouldn't be surprised for a couple of months still price going sideways in this green channel. Now, if I look at the daily chart, you can see, again, a smaller triangle within the bigger channel. The dark green lines indicating the channel, light green lines indicating the smaller triangle. And well, if price breaks below that triangle, there is a bit of a chance of, there is a breakout chance here for price to move actually to the 78.6 fib. You can see price respecting the 50 fib already, the 61.8 fib. So the next fib in line is the 78.6 fib at 106.35. So that could be a breakout to the downside in my vision, and then a bouncing spot again at that fib. The other scenario is that price could bounce at the bottom of this triangle back to resistance, right? Back to the triangle resistance and long-term resistance trend line as well. That is visible here. So let's take a look at that. And price seems to be a bit bouncing actually as we speak. So will it break below? Well, it will have to break at least below this 107.75 level, I would say, at the very minimum. That's one scenario. Or will it bounce? And if price bounces, then I would expect a bit of a hook back perhaps before getting the upside. But let me take a look at the hourly chart for a bit better reading on that. You can see a resistance trend line coming in. Price is about to break through that, or is trying to as we speak actually. So what I would like to see is probably a break above this mini resistance on an hourly at least at 108.40. A break, pullback, and continue. Could be a range trade within this triangle, back to the top, back to resistance on the euro dollar. Moving on to the pound USD, of course, we had a great break of this bottom, a great break of this downtrend channel, accelerating to the downside with massive daily and weekly candles with lots of momentum. But last week, look at that, one of the few candles that finally didn't end up bearish in the last 1.5 weeks, or 1.5 months, excuse me, and actually ended up in a doji with a close near the open of the week. So when looking at the daily chart, we see a couple of obviously bullish candles in price retracing back to the 23.6 fib when basically fibbing this breakout. So is this a moment where price is going to be retracing back to that channel, using that channel perhaps as a resistance, using the 38.2 fib as resistance? I think that that is a decent probability, in fact. I think that price could be at a spot that it makes this bigger retracement, and once it completes the bigger retracement at a 38.2 fib, for instance, that could be a decent spot for swing trade as a continuation of the downtrend. When I look at the 4-hour chart, you can see that this has been the first kind of bullish indication, basically in all this downtrend. Perhaps here there was a bit of a bullish rally that did not get any follow-through and just continued with the trend. Will we get a continuation of the trend here, or a bigger zigzag rally up to the 38.2 fib? And you can see, in fact, that when I put a fib on this swing high, swing low right here, that the target nicely lines up with that retracement fib. The green target is very close to that orange retracement fib, and the same is actually valid for the 50 and the minus 100,000 or minus 100 target. So those are levels or confluences. If price gets there, those could be good shorts. Now, I'm not 100% sure of the rally here, of the zigzag. I'm definitely keeping an eye on it. Definitely keeping an eye on this hourly chart. What I would be expecting, in fact, is a bit of a zigzag here, like this. And I think that the minus 61.8 target is going to be very important if price does make a bigger zigzag. All right, that's going to be a level that I'm definitely going to keep an eye on, because if this is a correction of a bigger correction, then the minus 61.8 target could be a very likely bouncing spot. The same actually for the minus 272 target, because there's a bit of support right in here, in fact. So those two levels are key for an uptrend continuation, or not uptrend, sorry, up zigzag continuation, right? And you can see that those levels correspond to the 50 and the 61.8 fib, all right? Now there's also even a chance of price bouncing off the 78.6 fib, because there's support on the left here. So yeah, I'm very curious how price is going to respond to these support levels. I'm going to keep an eye on price action and see if there are any signs, and time factor, in fact, which I'll explain on Thursday in the live webinar, and to see if I'm going to hunt for a long and against the trend. This is a reversal trade that I'm looking for, so it's higher risk. But if there is that potential for a bigger zigzag. Now, if it doesn't happen, and price actually starts to fall here a lot further, and starts to actually accelerate like this, and then starts to make a triangle formation, well, then I think actually there's a pretty decent chance, if price then breaks the triangle, then we got a downtrend continuation, right? In that case, the charts are looking more bearish if that happens. Whereas price stops earlier around here, then shows a bounce and a hook back, then there's a clear trend line like this, and then a corrective basically a corrective formation could be happening, and a break above the blue trend line could be the zigzag bullish breakout to the upside. So it's very important how price is going to react here. How is it going to fall? Is it going to fall strongly and build a triangle, or is it going to fall a bit slower, bounce off the target, give a hook back, and break? Two different scenarios. I'm going to keep an eye on both. Dollar yen, well, basically, when looking at the 4-hour chart here, you can see that price is bouncing off support. What kind of support is that? Let's take a look. You can see on the weekly, horizontal support after price breaking below this massive support trend line. And that support has been broken. In fact, that could be a neckline, perhaps. I don't know. You should probably use this bottom for the neckline. In any case, it could have been a head and shoulders pattern, break of support. You got horizontal support left, and that's where price is bouncing. Price is bouncing off that level and has gone back all the way to the 38.2 fib. Now, considering the break of the trend line, I think that could be a hook back for more downside. And when looking at the 4-hour chart, any of these fibs could provide resistance. So maybe a same scenario here as the pound USD could occur because this is a pretty strong impulse, broke above resistance. So what could happen is that we get an extension of this zigzag up to the 50 fib or the 61.8 or 78.6 fibs before we get the continuation of the potential downtrend there, because we broke through support here on the weekly chart. Price could even hook back to that before continuing lower. So could here be a zigzag? Could a bullish zigzag occur and then hit resistance and move down? That is the scenario I'm keeping an eye on, basically, on the dollar yen. If price does not move up like this, but instead breaks this bottom or shows weakness by showing a lot of momentum here and then a triangle like that, I would consider the analysis to be invalid, that the bullish zigzag might not occur, and there is a higher chance that price might break to the downside. All right, that wraps up my analysis. Thank you so much for joining. Hope to see you in the webinars today. And take a look at Admiral Markets' website. We got a lot of content being delivered on a daily basis, and you can find that on social media as well. Thanks so much, and see you soon. Cheers.